like to move on to our final topic now, which is payments for the underbanked and unbanked, especially in Africa and the Americas. Michelle, you mentioned earlier about mobile payments in Africa, but looking at low-value payment services across the board, not just mobile, for the unbanked and underbanked, and across the world, not just, I'm talking about developed countries and underdeveloped countries, low-value payment services to the unbanked, underbanked. Is it really a viable proposition for the banks?
I believe so. There are, depending on what statistic you want to believe, between $300 to $500 billion transacting in this space on its own, and that's only what we know. The real amounts may be double that. I mean, there's obviously all the money operators that transact money, but there's also money in the trunk of a car that crosses the Rio Grande, and that's probably not the safest way of doing it. The second thing, I also believe there's an aspect of social responsibility here. One of the things I personally, but that's my personal opinion, see in the market is that getting money from, for instance, Belgium to a Northern African country, where we have a lot of immigrant workers coming from there, getting money back through more classical channels is pretty expensive. And I think that banks have a role to play there, because with their infrastructure, they can help those people to get money there safer, faster, and in a less expensive way. And also at the same time benefit from doing that, from making unbanked people to semi-banked people to fully banked people.
I'd like to come back to the financial inclusion part of that in a moment. That is obviously very important. But from a commercial aspect, yes, there are huge volumes of payments for the unbanked and underbanked. But the trick is for a bank to access those payments in such a way, on such a scale, that they can actually make money from them. How can they do that?
Well, part of the value proposition to the banks is to be a distribution channel, whether it's through an ATM or a physical branch, so that the customers can receive the money that someone is transferring to them. And studies have shown a large portion of those customers actually convert to bank customers because they see the safety and security and convenience of the bank. So they want to give a service for the social responsibility, but they also want to convert them to customers who will take loan products and credit products as well.
And Nancy?
Well, it's also a situation where at least the banks in the U.S. are very much looking for deposits. It's a very important component. And if you think about it, when the unbanked use a Western Union or whatever, the money doesn't move immediately. Western Union has it in their account for some period of time. So there's an opportunity to certainly leverage that, at least for a short period of time. And beyond that, I mean, we've done some studies that actually show that many so-called underbanked, at least, do have bank accounts. They just are not using them as their primary financial mechanism. They prefer it for a number of reasons. Some of them it's because of a credit situation, and they really don't want to deal with the bank that directly. Some of it's convenience. If there's no branch, as we've been talking about the developing countries, there may be no branch nearby. There may be no ATM nearby. Or there may be a branch, but it's only open from 9 to 3, Monday through Friday. Yeah. So there are a number of issues in terms of that.
Now, financial inclusion, that is obviously very important. It's a concept that came into being 10, 15 years ago. I wonder how successful it's been. Let's pick the United States, Matt. Financial inclusion as a political concept, as implemented by banks. Is it a reality?
I think some banks are better at it than others, and I think you see geographic differences. I think that in the states that are around the edges in the United States, Texas, Florida, California, I think you see those banks recognizing that they have a higher percentage of their population that's often immigrants that need services and need to bank. So I think you see those banks reach out much more aggressively to that market segment.
And Gareth, have you done any research on financial inclusion and the success of it?
It's certainly when it became a priority of the UK government, the level of non-banked rather than underbanked certainly fell. they effectively forced the banks, to be honest, to offer a basic bank account to try and overcome some of these issues. So many people who don't have bank accounts do so because they want to do it cash, so they feel much more in control of their own budgets, and because they've got credit problems and things like that. So the basic bank accounts were set up to manage it in that way, but also run through the post office network, which is more neighbourhood based. Many of the people we're trying to target don't necessarily have the bus fare to travel 4 or 5 miles into the city where the branch is or might be working. So they try to spread it further. I think one of the interesting things which we'll see over time, and this is quite controversial, is that as banks start to think about who the customer base are and look at only profitable customers, will the least profitable, which are perhaps the underbanked, will they perhaps change their focus away from them, and whether we'll actually see an increase in the underbanked in the kind of the near future?
I'd like to move on to international remittances, which we've already touched upon, but I'd just like to deal with that in a little more detail. Banks are still reticent about moving into international remittances. You've got the likes of Western Union and MoneyGram, and in fact Western Union enter into alliances with banks. The banks use the Western Union network. But I think that the take-up by the banks is less than the likes of Western Union would like. Why do you think that banks are still shying away from this market? And perhaps Michel, I could answer that. You could answer that one.
Well, again, it differs on a country by country, on a region by region basis. Some of the banks, as we've seen from our customers in the United States, are not shying away from it. Quite on the contrary, they are embracing it. Some of the we have an interesting part of Europe where some of our solutions are deployed by a bank consortium to do those international remittances to the more exotic places of the world. Then the other thing is that technology is most certainly an enabler here, and some of the banks are still trying to get their arms around what it is they can do and what the possibilities are. Because I think with the new technologies we have, with the internet and being able to work in the cloud and all the other good discussions we've had, is the solutions will become progressively available, and as soon as banks start to understand what the options and the possibilities are, I predict there will be a significant uptake.
Well, I was at an International Association of Money Transfer Networks conference in London back in November, I think it was, and they have a vested interest in all sorts of organisations moving international remittances forward. And they were saying that certainly in the UK and Europe, banks are still very worried, for instance, about money laundering.
But exactly right. But that's where I see technology as an enabler, right? Because if somebody comes into a branch, wants to send €100 to family in Northern Africa or Middle East or Philippines or wherever, then the teller at the branch can evaluate the person, can make sure that there's no anti-terrorist financing here, can make sure there's no anti-money laundering here, can do a whole series of standard OFAC checks that will make sure that transaction is okay and should be processed.
But isn't that one of the major reasons why it's not been, the uptake is so small? Because the cash problem, or the cash advantage, should I say, is one of the main reasons. And you get a lot of these community, Hawala is a very well known, and I think people just don't want to do it through a bank. And I think the bank is probably saying, how do I make money from this? Because I think the business model has been as a percentage of the transaction. Now it's moving to a more competitive scenario where it becomes a play on the FX spread. And I just think that, banks already do international remittances. They've been doing it for years. It's just, international SWIFT telegraphic transfers. The issue is, how do you get the cash in and how do you get the cash out at the other end? And banks can't solve that problem.
But partly because it's the trust often in the receiving institution. Yeah. Right. Banks don't necessarily have the same standing.
Absolutely.
But also from a bank in North America or Europe, the reality is it's done on corridors, so that
Correct.
they're what community to another community.
Yeah.
So trying to build a scalable network is actually very tricky. So it's a long-term, larger investment unless you already have that infrastructure in place.
And let's not forget, SWIFT is trying to help with the SWIFT worker remittance initiative that they have. So the banks are trying to figure out the distribution issues they have, as well as the cost issue, being cost competitive, and SWIFT is helping with that.
But it goes back to the fundamental issue that the medium is cash.
Right. Yep.
And to what extent, especially for the Americas,
Mhm.
where money's moving from, say, the US or Canada to Latin America, many Latin American consumers don't have bank accounts.
Correct.
As you said, banks have a relationship with other banks.
Yeah.
They generally don't have a relationship with 7-Elevens
Yeah,
or
exactly.
a convenience store or
Absolutely.
whatever. So even if the person sending the money is banked, you may not be able to help them as directly.
And building on some of the things we've talked about so far, one of the interesting things that we've discussed is linking a mobile phone, having a banking application running on it, but not actually linked to a bank, but linked to a prepaid card.
Correct.
So you've got a way of transferring money, you've got something that is accepted in multiple locations, and you're almost creating a virtual financial services industry alongside,
Absolutely.
which has risks as well as the benefit to the people who are using it.
And if you talk about Latin America specifically, a number of companies don't pay in cash now; they pay with a payroll card. So your example would be, and that payroll card's accepted in the small stores in the community.
Well, that, everybody, is all we have time for. Thank you very much for joining us for this leadership series, and I hope you enjoyed it. Thank you.
Thank you.
Thank you.
Thank you.